During the early 1930s, distrust in banks wasn't just a theory or an opinion, you know. It was a survival response learned through loss. Millions of families watched their savings disappear overnight, not because they spent recklessly, but because institutions they were told were safe collapsed without warning. For households focused on survival, the lesson was simple and brutal. Control mattered more than convenience. What followed was not chaos, but a quiet, disciplined system of alternatives that kept families fed, housed, and financially alive when official systems failed. Between 1930 and 1933, over 9,000 American banks failed. Depositors had no federal insurance, no guaranteed recovery, and no timeline for restitution. When a bank closed its doors, savings were frozen indefinitely or erased entirely. Families learned quickly that money stored outside their control was money already lost. This was not some abstract fear. It was reinforced by neighbors who lost land, merchants who could no longer extend credit, and entire towns that ran out of circulating cash. The practical outcome was immediate withdrawal from formal banking whenever possible. Those who still had access to funds removed them quickly. Others avoided banks altogether, even when stability slowly returned later in the decade. This avoidance was not emotional panic. It was a calculated survival decision based on lived experience. Once withdrawn, cash was treated differently than modern households treat money. It was not kept for convenience. It was rationed, hidden, divided, and guarded. Families broke their cash into small sums and stored it in multiple locations to avoid a single point of failure. A common practice was to keep daily use money separate from emergency reserves, often in different rooms or even different buildings. Well, now cash might be hidden inside walls, under floorboards, inside stovepipes, or even sewn into clothing that was rarely worn. Some families, buried sealed containers in their gardens or barns, marking locations in their heads instead of with anything physical, just to avoid discovery. The goal wasn't secrecy just for secrecy's sake. It was really about resilience. If one stash was discovered, lost to fire, or stolen, the family wouldn't be wiped out. In many rural and working-class communities, cash was already scarce even before the Depression hit. As banks failed and wages collapsed, barter became the primary economic system, plain and simple. Folks traded eggs, preserved meat, soap, firewood, sewing, mechanical repair, and labor. Skills became currency, and, reliability became credit. This system, rewarded people who invested in practical skills rather than just chasing after abstract wealth. Families that could fix, grow, preserve, or build were a whole lot more secure than those who just depended on wages alone. In modern survival planning, this really does reinforce the value of tradable skills. A generator is useful, sure, but the ability to repair one keeps you relevant long after the fuel runs out. Even when money was available, families often converted it into tangible supplies real quick. Bulk flour, sugar, salt, kerosene, and seeds were purchased whenever possible. These items held value no matter what the market was doing. They could be consumed, traded, or just stored for the long haul. Banks weren't the only institutions to collapse, Credit systems failed as well. Instead of formal loans, families relied on informal lending within trusted networks. These were not charity arrangements, not at all. They were structured around reputation and long memory. This system, it favored honesty, consistency, and long-term relationships. Folks who had proven reliable before the crisis kept their access to resources during it. Those who disappeared or acted opportunistically, they found themselves isolated. Back in those days, families were real careful about what they let slip. Advertising any kind of wealth, supplies, or savings, that was just plain risky. Desperation, it breeds theft. So, a lot of folks kept their preparedness to themselves, dressed down, and steered clear of showing off anything that might look like abundance. Maybe the biggest change, honestly, was in the way people thought. Folks stopped assuming things would bounce back quick. They started planning for hard times that might drag on and on. Gardens got bigger every year. Kids learned skills early, sometimes before they could even read. And even when things got a little better, most families still fixed what they had instead of buying new. For us today, this all serves as a good reminder. Preparedness isn't just something you do when things go bad. It's a lifestyle built on facing reality head-on. Planning for long disruptions, that's not being negative. It's just understanding history, plain and simple. Folks back then didn't avoid banks out of spite. They just understood how fragile things could get. They swapped out centralized risk for personal control, real skills, trust in their neighbors, and things you could actually hold in your hand. Their ways were quiet, spread out, and honestly pretty darn effective.